Good morning, you wonderful people. Today's video is going to be on the real estate market and potential signs to watch for a re-entry point, or potentially it's your first time buying a home and you want to try and figure out when is a good time to buy real estate. So I'm going to share my thoughts on that. I personally think we'll be entering a deflationary period moving forward. And the reasons I see that is because we've had record high debt levels and we've had record low savings, and the banks are at record low interest rates, and they've been pushing the debt on everyone. The narrative has been to buy real estate. You can't go wrong. It only goes up. And there's just been advertisements everywhere. Buy real estate, buy real estate. To me, that's a sign of a market top. That is usually, in my opinion, when you want to be selling. And I'll be looking to re-enter when just as many people that wanted to get in, when that many people are looking to get out, and there's a mad rush to get out of real estate. That's when I'll be looking to buy. Now, doing that requires a lot of patience, and it hasn't been easy. I myself, knowing what I know and believe about the real estate market, had a lot of pressure to buy. And it took a lot of courage to not buy and to wait for the proper time. However, I think we will see a great opportunity moving forward because I see deflation. And some of the reasons I see deflation coming is because there's also this demographic cycle of baby boomers liquidating their assets and looking to downsize, sell off their investments, and basically to fund their retirement. So we have this huge population of boomers that are all looking to downsize at the same time, and they're all going to sell real estate holdings to a smaller generation that has less money and less job opportunities. So with this coronavirus pandemic, and they're all ordering us to stay home, how are people supposed to afford these big mortgages? With the average home in Canada right now being over $500,000, how are people supposed to afford that? And the people that did buy in the last 2 to 5 years, they have these huge mortgages. How are they supposed to maintain that? That's my question. And so what I see is a lot of these people will be shaken out of the market, and people will be forced to go and sell because they don't have the jobs to support these high debt levels. And when they go to do that, it puts downside pressure on the real estate market. So that's why I see deflation coming. The debt bubble is probably going to pop because we can't support it without the jobs. And we also have the demographic cycle of the boomers selling. And we have the new buyers coming in that don't have the capital. And also the banks are tightening up their lending practices to lessen their exposure to the real estate market. So all these things, in my opinion, are the perfect storm, the perfect situation to cause deflation. So when more and more homes come on the market for sale, it puts downside pressure, people start lowering prices, and it just goes lower and lower and lower while people look for bidders and look for people to re-enter the market. So things I want to look for before I look at entering the real estate market are, I want to see a return in strength. So I want to see home sales start to increase. And I want to see that in combination with job numbers increasing. I want to see the economy back to normal. I want to see lots of jobs, lots of ways to support the debt. Because without that, it's not sustainable. So those are all things I'm going to watch. I'm also going to watch for large number of people looking to get out of the market. And I want to see the sentiment. I want to see people saying that mortgages are horrible and everyone's rushing to get rid of them and looking to sell and get out. That's when I want to buy. So that's a bit of a contrarian approach. However, that's the best way to invest, is buy low, sell high. So when everyone's looking to get out, that's probably a good sign that it's a good time to get in. So I'll be keeping an eye on real estate market, on stock market, and all of that, and just looking for strength returning to the market, because this deflationary period could last 2 years, it could last 5, it could last 10, and it could be like the Great Depression, or it could be like the deflation that Japan's experiencing, where it was a 20 to 30-year downturn. So do not rush to get back into these markets. Have patience, keep an eye on them, do your best to earn money and set money aside in the meantime, and build up your capital so that when we do have a great buying opportunity, you're ready to buy. So that's going to be my approach. I'm going to focus on continuing to save, continuing to watch the markets, keeping an eye on the demographic cycle, watching the boomers all sell, trying to see when most of them have sold all of their investment holdings and downsized and all of that. So I'll be watching that. I'll be watching for strength return to the real estate market in sales and all of that, and looking for the job numbers to be back. And another sign that I might watch for is increasing rates, because I have a feeling when the time is right to buy real estate, the elites that orchestrate all this, they know and they manipulate this. So what I think they'll probably do is they'll probably start jacking rates so that when the perfect time to buy real estate is here, they'll make it really hard for people to do that so that they can take advantage of that themselves. And they'll make it hard for your average person to do that. So that's something I think they might do. However, we're in uncharted territory, so there's no guarantee that that will happen. But the other stuff I mentioned are all good things to keep an eye on. Another thing that I think has caused this bubble and will cause future deflation is that a lot of people made a ton of money on real estate in the big cities. As the governments increased these money supplies, all the assets inflated, and everyone was jumping into real estate. And here in Canada, our GDP is now over 50% to do with real estate. So that shows that all our eggs are in one basket. People made a lot of money. They sold their houses in the city, and then they moved to the smaller towns, and they bought up real estate there. They bought 1 or 2 homes, and they had some money in the bank. However, that's not sustainable. That money will run dry, and there'll come a point where these people will be required to go back to work, and the smaller towns will have less opportunity for that. So that is what pushed prices up in these smaller towns. And that is also what will put downside pressure when the tables turn here and people start to get called on these high debt levels and there's not the jobs to support it. So I'm going to keep it short. That is basically the short of it. That's what I see happening in real estate. I see a deflationary period. The big question is, how long will it last? How to identify the bottom? When is a good time to get back in, and things to watch for? So there's my thoughts. I hope you guys enjoy it. I'm trying my best to keep these videos shorter. I'm learning here. I'm new to making videos, so I really hope you enjoyed it and found some value with the video. Please like, share, and subscribe to the video, and I will do my best to keep bringing you guys more content. Have a wonderful day, guys, and God bless.